Let's click record now. All right, Ash, take it away.
Oh, he muted. You got me.
There you go. All right, so let's get back to this. Where was I? I was on this page. All right. So can you guys clearly see this?
Yeah, we're looking at candlesticks, right?
Yeah. Let's see. Move to the next page.
Type a 1 in the chat box if you guys can all see the candlestick patterns pictures. All right, cool. All right, cool. Everybody typing in ones. Looks like we're good to go. Take it away, bro.
All right. Let's see what other. All right, here's another great example for a long wick right here. So as you can see, it has had a bearish or a bullish run for up to the resistance line right here, and we can tell. Well, I can tell it's a resistance because look right here. Right when it gets here, it has a double body right here, double body. Just what I was talking about in the previous screen. A double body at the resistance line predicts that it's going to have a reversal. So right here is a huge reversal, and the market drops. And soon as it gets right here, it gets to around the support line. I'm not sure if it's a support exactly, but probably a price where the market isn't, agreeing with it. So it's going to have a long wick right here. If you want to sell, you're probably going to come down to, if you didn't get in a sell right here, we got it in right here, you're going to be in the negative for a bit. But as you can see, the market did push it down. And as soon as it got right here, there was too much confusion going on right here, and the market could not decide whether to buy or sell it. So it just went crazy right here. It just went spread. And as you can just see, the wick is a green wick, and that kind of indicates that it's going to be a positive right here. A lot of times it's red, which that also indicates that it's going to be having a reversal. So sometimes the color of the candlestick does matter. Other times it really, kind of depends on what the trend is looking like. But as you can see, a huge wick right here, huge tail, and a little body right here, which obviously throws the whole trend right here away and into a new one right here. So that's that. So right here, bearish pin bar. Okay. So when you're trading and you're coming on say this is a 30-minute candlestick, and this all forms, and you're waiting for a candlestick that you can possibly trade with. Right here, bearish pin bar, or I like to call this a undecided, undecided candle, where the pressure is all coming from both sides. Here you can see a bull and a whole bearish pin, which is coming right on the body. This is a perfect example of when the market is going to possibly have a reversal. Also, plus the color of it is also going to indicate whether it's going to be a bear or a bull. So if this was a green candlestick right here, it would predict that it was going to go up a bit right before it's going to possibly fall. Then if it's hitting the resistance line, if there's great news coming out, like I said, going back to the Forex factory.com, if you see there's a lot of news that is coming out for a certain pair, if this was a euro pair and there's a lot of news coming out that are, the actual is greater than the forecast, then this, and this is going to be a buy, I wouldn't put a sell right here, even if you see this candle. I would continue kind of, oversee how it goes. And after it gets to maybe a resistance line, I'll take my profit and set a smaller lot size to where if, a bull run, a bullish trend. But other than that, right here, if it's red and has a undecided candle pattern right here with the bearish pin being a long and the bull being short, this would be a clear position of a bear. Same right here. You're having a bear trend right here, and right when you get here, the market comes right here around support, and boom, shows back up, and the candle kind of ends right here, gets stuck right here. Market doesn't go up much, doesn't go anywhere below. So the market is confused and doesn't know if it wants to go either way. And because of the pressure, this candlestick is formed right here. And right here, so like I said, if it's the red candle, it's gonna have a bear. If it's a green candle, it's more than likely it's gonna go bullish trend, as you can see right here. Okay, let's go to the next page. Okay, this is a great example of how candlesticks have helped me, or how I use candlesticks to analyze what a trend is. And what I've been talking about, all the patterns that the bull or the doji or the reversal or the hammer candlestick that I've just been talking about. This is a great example right here. So this pair right here, as you can see, it's kind of been constant right around here. The market was probably coming down this way, where the resistance lines were here and the support line was right around here, I believe. And so it was coming in like a triangle, end of a triangle right here, which kind of puts the pressure. It's making the price of it come to a simple dot, and that's not good for a currency. That usually makes a huge reversal, depending on what the news says, like I said again, or depending on where in the market or where in the chart it's positioned. So right here, you can see it's fairly low compared to usual price. I believe would be right around here in the 9,006 to 9,800. So the market is fairly low. So when it's coming down into a triangle like that, there's more than likely it's going to shoot up. So ways to prevent from being wrong about a prediction like this. Here are great examples of candle patterns. So right here, actually that one would be a little confusing if you're not too familiar with it. So you can see right here, there's two candles, or it's a bowl right here, and then you're gonna have a slight change of candle patterns right here. It's undecided candles that I like to call. And like this is what I'm talking about. They're not usually 100%. They're not they're not gonna have a reversal because of the trend. So there was a lot of good news coming for this pair. Therefore, these two little candle bodies would not predict a reversal. So I would kind of stick around and let the market kind of go its way. But right here, bullish engulfing is called right here. Right after that, the possible reversal we were thinking about, it has a bullish pattern right here. And if the body is covering majority of the previous candles right here, the two candles, it is covering it, that's going to, that's going to keep a trend that is going to keep continuing on the bull run. So that can be, that can be seen right here, where this candlestick is also formed. And right after here, I don't know why they didn't indicate it right here, but right here, since it's an undecided candle, it throws the trend down and goes goes right back to the resistance or support, where it was a previous resistance right around here, which is now the support, as you can see, as these candlesticks have been kind of up and down, up and down. So right comes down to the support and kind of plays around. I wouldn't trade in these areas. These are very lucrative areas where I would never trade in this. But as soon as it comes down here, look, right here. There's that candle right there that I was talking about. So you have around three, you need to be confirmed that it's going to have a reversal. You're going to need 3 to 4 candles that are in a trend. So right here, you have 3 candles that are in a bearish trend. And previous to that, there was also a bearish trend, which you kind of take into consideration. But this right here, this is gold. This is 3 in a row, and it's in a bearish trend, and then bam comes a bull. This right here is undecided, and it's fairly tiny, which means the pressure is very high, and it's gonna explode in a way. It's gonna shoot in either negative or bearish or a bull, which it indeed did, because look, the color of it is a bull. So right there, if you put it buy, if the market is going to go down a little bit here, you just got to be, patient, let the market do its thing. If you're confident, you got to make sure you're confident. Look back on Forex Factory. Look back on all the news letters and whatnot, where the market is talking about that currency pair. Is it going to be a good buy, or is it going to be a good sell? So depending on that, you're gonna, stay in this position. So I would place a buy here and let my phone be, or I would kind of scale out the market, see where I could possibly take profit, or where I could possibly take this market up to. So right here, I put the buy. I let the market go down, up and down, and then this is where I'm truly confirmed that it's going to be a trend. You see a full body candle, and it's a green candle, and then right after that, it's a green candle with the huge bull wick right here, with the body being right here, and this small bearish wick right here, which overpowers obviously, and the market shoots up. Like, look at this. This is at least around what, 50, 60 pips around there. I'm not too sure. Could be wrong, but it is a huge gain right here, and the market continues. You don't see any kind of pressure coming along. You don't see any indecisive candlesticks forming. So you're going to continue riding this trend until you get to maybe a red candle which forms. And this, some people would take this as a sell, so they will stop trading with there. I personally will stop trading, would not risk it, and go on one day with the trades. Or unless you kind of, you take a profit, I will stick around and continue right here and see what happens. And as soon as it gets right here, you can see that it shoots right back up. And that's the undecided, because you have a bear candle right here, and then you have an undecided candle, which is a bullish. They call it bullish harami. And right after that, market goes right back on the trend. So there's much more example throughout the whole thing, and I could go more in depth, but I believe you guys get the whole concept. So here's another example. Doji, he was a huge bear, and then coming down to right here, testing support, and then shoots back up. It's a red. Is the bears are taking over, predicting that it's going to be a market trend up, and bam, it goes up. And then you're confirmed that it's going to be another trend up going from this right here, this wick bull, as well as the candle is green. So it's going to continue to trend up until you get right here where you have a double wick, like I said, double candle body, which is predicting that it's going to be a trend down. 3 bullish soldiers. Like I said, again, you're going to have at least 3 to 4 confirmations before you do a reversal trade. Same here. You have undecided right here. And the thing, you have so many different strategies you could use when trying to analyze such markets. Continuing on, I think that's about it for this one. Yeah, that's pretty much my understanding of how candlesticks form, how I analyze the markets. I'm also a scalp trader, which means in my personal experience, what I do is when I put a position, say for instance, I put a position right here, and I let the markets play. I'm watching the markets. I put a small lot, maybe 0.05, 0.02, depending on my lot size or my account size, and I'll let it, and I'm saying it's going to be buy. But as you can see, the market kind of goes down right here. So what I do personally is I place another buy. If I'm sure that it's going to be a buy, I'm sure that it's going to continue up a trend, I already place a trade right here. I don't want to take that out because I'll be in a loss. What I do is I place a buy right here. If it keeps going down, I'll place another buy. If it keeps going down, I'll place another buy. That strategy is really, really helpful and really important, but it is very also risky because, like I said, if you don't know what the market is looking like, you're not gonna have a good time on that trade because you're gonna take a big loss. But luckily, none of my trades that I've taken with the scalp have ever had a loss. I personally have not had a red take profit or red stop loss. My stop loss, I don't place a stop loss. That's just my personal experience. I'm a very risky trader. I don't put a stop loss, but if I did, I'm sure many of them would have been hit and I would have made reds. But the reason I don't put a stop loss is because I see a trend where, majority of the times if a currency is going in a trend and it's a buy, if I also put a stop loss, it would like somehow just drop below my stop loss, go a few pips below, and then as soon as it gets there in the support, it shoots right back up. Maybe that support was invisible to me, or maybe it was an unpredicted support. But as soon as it gets down there, it shoots back up. So I could have been in that trade if I didn't have a stop loss. So I kind of use that mentality myself. I don't suggest anybody doing it. These professional traders right here, they surely use stop loss because risk management. I've lost an account. I lost a 12K account last year, which is another reason I didn't go into in depth, but that was another reason like I was not motivated to trade. But now I'm back, and I'm back to my old self. But now I'm a little bit wiser. I know what's going on in the market. And if you guys kind of use that strategy, put it all together, use different resources, you're gonna have good trading, guys. Make sure, because this is your money. This is your own money. This is your hard work money. You want to make sure you use it, as legitimate as possible. You don't want to just throw it out there, and hope for the best. You want to have a strategic pattern or a strategic strategy where you use it to where you're gonna have constant profit. So use it, like we say all the time, use trading as like a job and not gambling. Gambling, you're predicting, you're throwing your luck out there, hoping for the best. That's what majority of the gamblers lose, and lose everything basically. So use trading as like a job. Focus on it. Try learning what you can, and hopefully one day you'll get to where you would never have a loss. So I'm gonna end. That's my part right there. I'm gonna go ahead and switch it over to whoever. I think it's Robert. I believe Robert wants to give his insight, or Dakota. Whoever wants to take over, go ahead, guys. Thank you guys for your time, by the way.
Thanks, Ash. We appreciate you. Just know, hopefully we'll get more calls with Ash in the future. You know what I'm saying? We'll be able to get more detailed about the candlesticks, of course, just because I know that was kind of like fast paced for everybody. Candlesticks. Some person even mentioned that's why you don't rely on just candlesticks, which is exactly why Robert and I are about to bring in some other technical aspects to definitely take into account. Hold on, I'm actually looking for Robert. I'm gonna let him go first because I'm gonna finish it up. Let me see where you at. Unmute. Perfect.
Yo.
All right.
So what's up, everybody? Like I said at the beginning, thank you, everybody, for getting on this call again. I appreciate everybody's time. Like I kind of went over my little story at the beginning, so I won't be going over it again. I'm going to just jump right into some pairs real quick that I have set up, and then we'll just go from there. So first things first, guys, I'm more of you can call me a day trader, I guess. I usually look for setups more on the hourly, 4-hour, and daily charts. Longer setups, meaning like those 100 pip stop loss to 250, 350 pip take profit trades, like that. But lately, I've just been focusing more on 1 hour, and it's actually been working pretty well with my Fibonacci and the strategy that I use with Fibonacci. But for this example, I'm going to show you guys the 4-hour chart, and it's on Euro GBP. We see here that we have a major resistance, and down here we have a major support. What I look for whenever I trade, honestly, is either to get in on a sell at the support, or get in at the resistance, or to get in as a buy at the support. Now, once I have more than 3 or 4 confirmations on a trade, like let's say if the market hit up here on the major resistance more than 3 times, then I know that for a fact that the market really isn't trying to cross over that area. So it gives me confidence to sell up here. And same thing that down here, we see that the market has bounced once, twice, almost 3 times. So that gives me the confidence to buy it down here. Now, on a smaller scale, we see that we have a smaller scale support and a smaller scale resistance in between that. That's for shorter scale entries. Now, we see right here, right where I was looking to enter, it was kind of like a pullback into that area where I'm hoping it breaks that resistance and turns into new support, which is what I'm looking for. But I actually bought this down here just for the main purpose that, okay, it's around my support. It had blown past my resistance and turned new support. Now we see that on a smaller scale on our support and resistance that we have set up already on a smaller scale. apart from our major resistance and our major support, we see that it has broken our smaller resistance and has turned into support. So now what I'm looking for is for this to continue going up, break the major resistance, and that turn into a major support for the continuation of the uptrend. Now, the way you can look for, I actually had this chart here, so I can actually draw out a support and resistance and how I actually look for a support and resistance on any given trade. Usually what I would look for is I kind of go back a little bit to see what kind of happened before and kind of what movements the market was making, whether it was in a downtrend or it was in an uptrend from before, to see what it kind of is going to do in the future. So if I was looking at this pair Euro AUD on the hourly chart, I would say, okay, I see right here that I have a resistance and I see right here that I have a support. So I have my support and my resistance. I can see that price has broken support and made a resistance right here, took off, broke the new support on a smaller scale. And now we have a new support right in this area, and a resistance at around this area. So now we have a major support and resistance, and then we're kind of now seeing new levels being formed as resistance is breaking and it's being turned into new support. So pretty much if I was looking at this, I would say once the market comes down here, I would buy my first take profit would be resistance, because that's where I would be looking to get out as my first target. But this is where I would incorporate Fibonacci. Now I'm gonna bring it out into a 4-hour chart so you guys can actually pull up more. But if you look at it on a 4-hour, it looks like an uptrend still, you see. And I just don't know how much longer it's going to keep going up. So if you look back, you can see that the market has kind of already came in this area and keeps going down to this area. So this area may be a key resistance. So it may be a drop down to this area. You can look in, this is why I look in the hourly, 4-hour, or daily chart. So now if we look at it on the daily chart, we see that this area up here is a major resistance. So now from here, I would, in my opinion, I would think that this is going to end up here, hit that major resistance, and then keep dropping. So now what we would do is we would come from here. Sorry about that. We would come from here and draw a Fibonacci from the top of, wait, let me actually put a line for it before I even draw it out. From the top up here to where we're trying to enter. So I'll go from top to bottom all the way down. And you would see that first area, that 236 area, is around our area of resistance. Usually always when you drop the Fibonacci, the 0.236 area is going to be where your first resistance is. Now, once this blows past this 236 area up to the 382, usually we're going to see a pullback back to this area, which should be our new support. So once that blows past the 236 into the 382 in the 50% area, we're always, 85 to 90% of the time, we're usually going to see a pullback back to the 236 area before we continue on the uptrend going upwards. So if I was to look at this trade, I would look at it this way. I would say the market is going to come down here, and then the market is going to take off up here to the 382, and then it's going to drop back down, back to the 236. Then once it hits that area, it's going to jump up to the 50%. From the 50%, we're going to see a small, which is usually the biggest area. But if the uptrend continue, we'll see a small pullback back to the 382. And then from the 382, it'll just go to the 618. So wait, let me actually see if I can pull this down, because I know this is, oh, damn, it looks weird now. Damn. Yeah, it looks really retarded now. But no, it still looks retarded. Let me fucking refresh it.
What's it called? Can you hear me, bro? You gotta click auto on the bottom right.
Auto on the bottom right?
Yeah, make sure it's blue. So when you zoom in and zoom out and stuff like that, it automatically goes back to format.
Oh, lit, bro. I didn't even know that. Damn.
Yeah,
All
so
right.
that way you can get like some crazy zooms in. So there you go.
Damn. Thank you. Perfect. All right. So back to what I was saying with Euro GBP. Let me take these old lines off. I'm sorry. But yeah, here we have again our support, resistance, well, support and resistance. But I actually can't even freaking bring. Oh, there you go. All right, perfect. So, or I can actually look it up on the hourly chart because I could drag it up. Perfect. So, how I would incorporate Fibonacci into this, I would simply just go up. Well, let me find actually where I wanna. Um, where's that high? Oh shit. Um, so right there. So then I would just simply go like this, get my fib. Oh, wait, sorry. Just come from top to bottom. And then I'll just go move forward, playing it on an uptrend. And also you guys can get in on the pullbacks as well, guys. Once you have like an uptrend, we below resistance. If you want to get in at the 236, you can when it comes down, and then you can buy it, wait for the pullback at 382 and buy there and go on following the uptrend. Now, you don't have to. You can just keep one trade from down here and just ride it all the way up, or two trades if you twin trade. Depends on how you trade or how many entries you like to do. But yeah, this is what I would be thinking would happen on Euro AUD, just up to that major resistance zone. And then we should see if it'll hold and come back down or if it'll break and continue the uptrend. So that's how I pretty much kind of use support and resistance to find out entries. And then I use Fibonacci to figure out where I want to take profit. I use the Fibonacci to figure out what levels I'm seeing or where I want to get in and get out and what my take profit should be. You guys can use any take profit, 236, 382, 50%. I usually use the 50% as a major take profit because that's a major area of either a reversal or a continuation of a pattern. And once you realize, all right, if it didn't reverse from the 50% down back to this area, then it's going to continue. It may drop into this little area a little bit, but it's going to continue going up, and that'll mean a continuation of an uptrend. The only time we should see a reversal from the 50% area is if it comes back down into this red area below the 236, which we know from then it's probably going to come back up to this area, make a resistance again, and keep continue going down. But let me actually show you guys one trade for the week before I actually wrap it up, which actually is going on according to how I wrote it down so far. So here we pretty much see here at the beginning of this candle, I actually drew it out last week. I said that AUD USD would come down to this support right here, which was a major support for us. And we got in actually at 77,400, excuse me. And it was pretty much a non-risk trade. It hit that major support and has taken off. It has now blown past our small scale resistance and is now looking to either continue going up and come pull back down to this area, which is our minor support, which would be our minor support turn resistance, or it's just going to continue up, hit this area right here, then come down and continue. So just a trade that I gave out and how I incorporated the same things that I taught you today into an actual trade. With that, I'm gonna wrap it up. I thank each and every one of you guys for my time. I know we're 7 minutes remaining in the call. We're probably gonna have to do another call because Dakota definitely has some awesome things that he's gonna be going through. So that's it for me, guys. I hope you guys learn. And if you guys have any questions, feel free to hit me up at any time. Yeah, thank you, guys.
All right, thanks, Rob. Appreciate you. All right, guys, I'm Dakota. That was pretty lit. I actually love support and resistance, so I got a little fresh intake on that. I hope you guys did too, because that was straight fire. My man's is on point. He's been running the Pip Field page, if you guys are not familiar. So if you guys catch any of those Pip Field trades, you know who the guy who's been helping you out there.
Yeah.
Represent. All right. Well, like he said, we only got about 6.5 minutes, so I'm gonna kind of like not breeze through it, but I'm gonna try to do as much as I can in the time frame I got. So without further ado, I'll start on my chart. All right, guys, so this is my chart, and I'm a little bit of a crazier trader, as you can see by all my nice little color coding stuff. Yeah. The main reason why is because these colors all signify something. They're called psychological key levels. And the way that I use those to distinguish stuff, it may look crazy because we're on the biggest time frame. I always start on any chart that I want to look at. I always start on the monthly time frame because, like, what I like to do is I like to zoom out as much as I can, get like a bigger picture of where the market is, and then hone my skills in on where it is I want to see some movement. So ideally, obviously, I can't see anything in 1998 that's going to help me in 2018. So obviously, besides the fact that you're zooming out to generally see that it's on a downtrend on this right area over here, the more recent area, 2018, 2017, is because this is what I use for my key levels. And what these key levels are major and levels of support and resistance. And you can kind of see it, I guess, in a way, if you were to generalize where the candlesticks are and where they meet at the ends, you can notice that they touch my levels of my quarter keys, my minor keys, and my major keys. All that is a whole bunch of craziness, but to like basically explain it in the beginner sense is that what you want to do is you want to go on a monthly time frame and identify the highest point of that. You want to identify the highest point of that chart. So as you can see right here, the highest point that I can see when I zoomed all the way out was around this level, which is where my original major key is. And the way that I distinguish major, minor, and quarter keys, I'll explain right now. Major obviously holds more weight in terms of support and resistance than minors and quarter key levels do, but they all play very big roles, and I'll show you what I mean by when you zoom in into a smaller time frame. So we go into like the weekly. You can see how stuff is generally bouncing often on my key levels. And the way that you measure key levels is that major keys are located 1,000 pips between one another. So if you go back to my monthly time frame, and you'll identify, this is USD JPY, by the way, guys, if you want to use my base pair here as a template. So my major key level was around here at the 148 pip mark, 148.000. And what I did was I subtracted 1,000 pips from that to reveal my next major key level, which was here at 136. Oh, I'm so sorry, this is JPY. So for the major key levels are 1,000 pips whenever it's a pair that does not have the Japanese yen, and whenever it's a pair that does not have gold, which is XAU. When it does have JPY and XAU, the pip levels for major keys is 1,200. So that's the reason why you see my major key level go from 148 to 136. Now, the same way that I'm going to apply USD JPY knowledge for the minor and the quarter key levels, I want you to apply that same logic to the other pairs that I did not mention, which are the ones without JPY and the ones without XAU. And so if the major key level is 1,200 pips, the minor key is exactly half of that. So that means it's 600 pips away from the major key level. Okay? And for the quarter key level is exactly half of the point between the major and the minor. So that would be 300 pips. Again, this is for the pairs with JPY and XAU. For Euro and all the other pairs that don't have that, you would use 1,000 for the major key levels, 500 for the minor key levels, and 250 for the quarter levels. And you always do that by full pips, guys, not micro pips. We don't care about the last digit all the way to the right. I'm talking about the second digit. That's how you measure a pip. So once you guys get that, you'll have a great general idea of support and resistance. Hopefully I'm not too short on time here. I feel like I've already said a lot. Okay, so using that, that's on the monthly time frames. Then you have, you can color code it if you guys like. I like mine color coded. I'm a very organized kind of guy. So if you guys want to do that, you can do that. Once you do that, that's for the major and minor and quarter keys. Those are the levels of support and resistance. Now we can zoom in to see what's going on a bigger, on a smaller scale, a scale that we can basically manage. And what I want to do is here, I'm going into the daily after I'm done in the monthly. So you can identify that now on the daily trend, since the beginning of the year 2017, it's been currently in a downtrend. And the way that you identify that is that downtrends are noted by an extreme high, like the highest point of the chart, having a lower high. And what I mean by that is here, I'll even put a nice little circle on it. Okay. Cool. Okay, so right here is an extreme high, okay? That little place that I circled. And then this would be another high. Oh, wow, I didn't mean to extend that. I'm sorry, guys. This would be another high. This would be a lower high. And the reason why I say that is because it is the highest point that it's dropped since then, but it's also the highest point compared to the other parts of the chart. And so the next lower high that I would identify would be this one. But as you can see, between this one and this next one is about the same level. So I wouldn't necessarily call it a lower high, but about an even high, if not a consolidating market has happened between these 2 points. That's what you can generally see from here. And so that's how you identify the downtrend. What you want to do is you get from the highest point to the most recent highest point. So you see how I started from here? Here, I'll even erase these more recent circles. I started from there at this higher circle here. And then my next point where I wanted to touch was here, which